about you, but in my culture and community, there's always been this strong emphasis on appearances. We call it las apariencias. And it can feel like people are always trying to just show off how wealthy they are. American culture is so heavy on consumerism, hyper consumerism. We're always buying stuff even if we don't need it. And that leads in a lot of cases to having debt. One lesson that I really wish that I had learned and internalized earlier in my life is that las apariencias engañan, which means that looks can be deceiving. So regardless if you're first gen like me or if you're Latina like me or not, the credit tips in this video are going to help you build and increase your credit score. I got to give a big thanks to Unidos US, the largest Latino civil rights organization in the United States, for partnering with me on my platform to share gems about building credit straight from chapter 4 of my new book, Mind Your Money. Whenever you take a class, there's usually a syllabus that the professor or the teacher will give you, and it tells you the different things in that class and the percentages towards your grade that you get. For example, they might say attendance is worth 35% of your grade, right? So you know that you need to show up to class in order to get all those points. And if your midterm and final exam are going to be worth a combined total of 30% of your grade, then you know you better study for those exams in order to get a good grade, because those are worth a lot of points towards your final grade. This is the exact same concept when it comes to your credit score. But the thing is, nobody at the bank is going to give you a credit syllabus when you sign up for your first credit card. So that's why you got to know these things. Let's jump into what I call your credit syllabus, which is a breakdown of what makes up your credit score. Number 1 is payment history, and it's worth 35% of your total credit score. I always pay at least a minimum balance that's due to my credit card every single month, because late payments are going to have a huge impact on your credit score, and in a bad way. Now, what I used to do was put reminders in my phone or like on my Google Calendar to help me remember that the payment date was coming up. But that was when I was a hot mess. Now I set up automatic payments. So you could set up automated recurring payments, and you could set it up in the amount of the minimum balance that's due every month. So you don't have to worry about making a late payment, and your bills are just going to get paid while you're sleeping. So just make sure that you do that. But if you can afford to pay the balance in full every month, that's much better. Okay, but what do you do if you're struggling to make the payment? Maybe even just the minimum is too much and your budget is a little tight. Well, then in that case, you need to work with your creditors. So I would tell you, just call up the credit card company or the loan company and just ask them, can they set up a payment plan for you where maybe, your payments are spread out, or the due date changes and it's pushed to later in the month so you have more time to come up with that money. Okay, so my last tip for payment history is to check your credit report. You can do this for free once a year. You don't have to pay to check your credit report. And you should be checking it regularly, like once every few months, because there might be errors or fraudulent activity, and that could be negatively impacting your credit history, which obviously hurts your credit score. So you want to look over your credit report and make sure that if there are any errors or anything unfamiliar, you call up the credit bureaus or the credit reporting agencies and let them know that there's something going on that doesn't look quite right, so that they can investigate, because that incorrect information is going to get handled by them. And anytime you dispute information like this, they must verify it, correct it, or delete it within 30 to 45 business days. So for free reports, all you got to do is go to annualcreditreport.com. By the time my statement cycle is coming to an end for each of my credit cards, I've already paid down the balance that I owe to less than 10% of my total credit limit, because credit utilization is worth 30% of your total credit score. So keeping your balances really low is going to help you maintain excellent credit utilization. And that way you never get close to maxing out your credit cards. One hack that I think is pretty easy to use to increase your credit limit is to just call up the bank and ask them to increase the credit limit on your card. That helps you lower your credit utilization ratio. But the thing is, you have to be careful with that, because if you increase your credit limit and then go ahead and just spend more money, you're going to stay in debt, or you're just going to be in that negative cycle with credit cards again. So you got to make sure not to increase your spending just because you got more credit on that credit card. I always keep my oldest accounts, especially the first credit card I ever opened. I always keep it open and try to keep it active, because closing your oldest accounts can shorten your credit history, and then that negatively impacts your credit score, because length of credit history is worth 15% of your credit score. It's really important that you know that if you have older accounts, you got to keep them open and active. Now, the thing is, even if you don't really use them very often, you should still keep them open. But a lot of people will say, but my oldest card, it has a fee on it and they keep charging me every year. So if your credit card has a fee, you could just call that credit card provider, that company, and ask them if they can offer you what's called a product change. Because a product change is just an easy way to downgrade you from a paid credit card product to a free credit card product from the same company without you having to close your whole account. If you become an authorized user on someone else's credit card and they've had a really long age of credit, that can help you build up credit history. So with my nieces, they'll call me up and be like, Tia, can you add me as an authorized user for your credit card? Because they know that I can help them boost their score by adding their payment history and their age of credit from mine. But you have to be sure that if you do this, you pick somebody who's responsible with their credit card, because you're basically piggybacking off of their credit and their payment history to build up yours. When I first started with credit, I was only 18 years old, but now I'm in my 30s. So I try to make sure that I have multiple credit types, because credit mix is worth 10% of your credit score. And this is just a really easy way to get some extra points. So having different types of credit, like credit cards, a personal loan, a student loan, maybe a car loan or a mortgage loan when you're ready to buy a house. Because having a variety of loans like that, especially by the time like you're older and you've had credit for a while, it's just a really good way to show the banks that you have the ability to manage a lot of types of loans responsibly. But the thing is that you only want to apply for a loan if you really need it. Like, I never get a credit card if I don't have a specific purpose for it, or if I'm not going to use it strategically, right? Because if there's no purpose for the loan, you're just going into debt for no reason to try to open an account, and that inquiry ends up hurting your account, which we're going to talk about right now. New applications for credit or new credit inquiries is worth 10% of your score. So I'm very selective when it comes to applying for credit cards or loans. Like, I only apply for a loan when I actually need it for something specific, and if I'm confident that I'm going to be approved for it, because I don't want to put out an application and then they deny me. So whenever you apply for a new type of credit, it actually lowers your credit score a little bit in the short term. So you want to do some comparison shopping. Look around and compare the different opportunities for loans or credit cards, and find the one that's best for you, or that is like the best deal, because that will help you avoid unnecessary credit inquiries, and it will help you find the best rates based on your specific credit score. It's also a possibility that you could get pre-approved by having the company do a soft inquiry on your credit, which is not the same as a hard inquiry, because it doesn't actually hurt your score. So if you consider this, it could actually help you avoid getting all of those hard inquiries, and that way you have more of a chance knowing that you'll get approved before you apply. To find out if you could get pre-approved, just call up the lender that you're considering applying for a loan or credit card with and ask them if they can pre-approve you. Okay, that's all you need to know to get an excellent credit score, or to establish credit if you don't have any yet. To learn more about the incredible work and mission of Unidos US, head over to unidosus.org or click the link in the description box below. Personally, I'm really inspired by the financial education and empowerment that they offer, and the workforce development that they offer to my community. There's over 62 million Latinos working and living in America. We contribute about $2.7 trillion, with a T, trillion, to the economy. So we need to advocate for this type of education and empowerment, especially when it comes to navigating the financial system. Share this video if you found it helpful, especially with somebody that you know could use these gems. And don't forget, subscribe, comment with any questions, and grab a copy of my new book, Mind Your Money. Peace.